Plenty of buzzers in the market, and many of the buzzers actually have been on the way down today. Jitendra Sriram, Senior Fund Manager, Baroda PNB Paribas, is joining in. Jitendra, thank you for being with us this afternoon. As we are welcoming you in, the screen is showing a lot of pressure. The Nifty is at 25,750. It's barely trying to hold yesterday's low, and the mid-cap market has started seeing a lot of pain as well. First, on mid-caps, what is your sense? Till now, it's been, of course, mutual fund flows that have, held up the lower end. But now, do you get the sense, are you hearing anything about retail leverage or HNI leverage positions which are beginning to get sold in the market?
My suspicion, and good afternoon to all of you viewers, is that I would think that the first phase of selling came more through in the large caps, mainly because that's the most liquid segment. But I think given the pressure of primary paper supply, all these QIPs and various other things, I think slowly the sell down is starting to percolate into the broader market as well. In fact, if you look at it, the larger market seems to be holding up a lot more stronger now than the mid and small cap indices. So I think there is some rotation happening from the larger cap, from the pressure coming on the larger caps to now it moving more to the wider markets now.
So have you all been lightening up on your mid cap, small cap exposure, gravitating more in towards large cap? I mean, considering that the mid-cap index is only up now 3% year to date, small-cap index is down 8-9%. What have you all been doing with your portfolio?
So if I look at the last 6 months itself, the on two parameters. First of all, on the issue of earnings resilience, I would say that broadly, if I look at the earnings side, large cap has held up a lot better than the mid and small cap. Mid cap has been a little bit patchy in a sense. There is a bunch of stocks which have actually done quite well, but there is obviously, if I look at the broader index, it has been roughly in sync with the large cap, but obviously the valuations were anticipating a lot more growth, so expectations were a lot richer. Small cap has actually been the worst of the lot in terms of earnings momentum, so it's been a lot lower. So if I were to take numbers, the large cap indices is more closer to a 10% growth rate, whereas if I look at the small cap, it's closer to 5% kind of a number. The second part is on valuations, and if I look at that as well, and if I look at the last 7-year, 8-year min-max of Ps that these segments have traded at, I would say that a large cap is somewhere close to the median, whereas the mid and small cap are slightly ahead of the median. So from that aspect also, we feel that the market is slightly getting more pro the large caps compared to the mid and small cap. So it's something that we have consciously been doing, that we have generally been a little bit more pro large caps than being mid and small cap oriented at this point of time.
All right, hi Jitendra, good afternoon and good to see you in. What do you make of this entire aviation saga? It's hurting customers big time, but as a shareholder, is this providing you an opportunity? After all, we know Interglobe's execution, there's been a lean and a very mean machine as well. Would you believe that this dip that it's providing is actually an entry opportunity? We haven't seen too many airlines that have done what they have done in terms of profitability, in terms of grabbing market share. Your take?
So I would say that the big thing that one needs to consider on the aviation space is that what eventually happens because of these FDTL norms. Because see, right now what the government has given out is basically a 3-month deferral on the FDTL norms. So there'll be certain amount of a negative leverage which will come in there because, if pilot hours, working hours move down from 48 to 36 a week and so on and so forth, you will have to incur a 25% higher cost eventually. So assuming that the full impact of it gets captured in FY27, one will have to rework the numbers towards a higher, pilot cost. Also, the fact that some amount of degree of operating leverage will also be adversely affected for the sector because of the issues that, your ground time will be a little higher and so on and so forth. So I think that is where I think the market is now probably readjusting to a new normal, both in terms of return expectations, the ROEs of the sector and so on. Because if I look at the other major factors, like 1/3 of the sector is basically crude cost, that's been quite benign. So I don't think there's any other external factor which is responsible. It's partly to do with the regulations, the safety features and all that, and market having to evolve and adjust itself to this new normal now.
All right, Jitendra, and it's ironic, right? Because you have the market leader that's in a bit of trouble and there is no alternative. because even SpiceJet, imagine on a day like this, when a stock, Interglobe, after falling 20% is down another 3%, and still people are not buying SpiceJet. So that's a bit of an issue. I'm hopeful that Mr. Singh will join in and, in fact, gives us some commentary as well in terms of how does he see things pan out for SpiceJet, because their execution has been lacking. That said, before we let you go, we're getting to 2026. I'm guessing this is the last conversation we have in 2025. What's your view getting to 2026? Do you believe that we're likely to be higher? It's going to be a good year for the Indian markets? Or are you a little bit skittish? Because bulk of the year has gone waiting for this trade deal, though the ingredients are in place for much better earnings in 2026. So how do you see things shape up?
No, I think the broader market should look up. So in a sense that your valuations are more closer to the median, as I mentioned, and you have earnings momentum slowly starting to come back. So the most powerful ingredients are already there. And if I look at from a global context also, it is very likely that the Fed will continue on its rate cut trajectory going forward. So which should generally be positive for EMs as such. So hopefully that should also give some stability from a flow perspective from the FIS side. So I would be broadly constructive on markets from here on. But the sectors which could perform now could be very different, like metals, exporters, those kind of things which could end up doing far better than traditional domestic oriented sectors.
Got it. Okay, all right, Jitendra. Thanks a lot for joining in. We end the conversation on an optimistic note, and hopefully things pan out in that manner. Chat up in 2026. Well, it's time to slip into a short break. On the other side, we'll get you some technical